Tuesday, January 2nd, first trading day of 2024. Market analysis, Stan Ehrlich. And you guys know I start out with the stock market indexes and go to the futures markets and sometimes some other things like the Santa Claus rally, which we have taken our first offset today. And we have two trades left to offset, one tomorrow and one the next day at 6:45 a.m. California time for the offsets. Not the Santa Claus rally at the moment's not doing too well because we're down pretty good today. We'll take a look in a moment. So on my daily data charts, the E-mini March futures contract is down about 30 and 47.89 last tick, a little below Friday's low. Yesterday was a holiday. We got overbought, quite a bit overbought in the last couple of weeks. We did have one bearish engulfing ER sell signal, but it didn't work. The market went up and stopped us out with a small loss. But now the market is starting to come down. I expect that this support area is going to be challenged at a minimum. So I'm looking at 47.37 at least in the next few days. But I think a lot more likely than that is the lows, the highs that we had back in late November, early December. And that would be starting at about 46.60 and maybe a little bit lower than that, 46.30. That's where I think the market is more likely than not going to turn back up again. Remember, I'm looking at a short-term minor downside correction and what I consider to be a longer-term bull trend, of course, ever since October 13th of 2022, when we had a gigantic bullish engulfing buy signal at the bottom of the bear market and the beginning of this bull market to the exact day. All right, next chart is the spider. They seem to be out of sequence, so let me do this. Click on the spider manually, and here we go. Did not gap down, although at first it did. Now it's rallied, so it comes back up to the low or a little higher than that of yesterday. That would be Friday, not yesterday. It was a holiday. And we're down on the day on the spider about 2.5 points, a little higher than where it opened. Nothing particularly super profound about this. It did bottom out a little support area. And why is that blue line there? That is because of previous highs way back in November of 21 and the very, very, very beginning of January of 22. That's why that blue line is there. So it is a little bit of support. I wouldn't call it the greatest, but it's bounced off of it pretty accurately so far today. I think it's going to be broken. Again, looking for this support area to be challenged, probably down to 460-ish on the spider. Next is going to be DIA. Now, we have a bearish and we have a possible sell signal if the DIA can close below Friday's close. We do have a higher high today, and it is a new high for the whole trend by a little bit. Just slightly above Friday's high and a slightly above, it looks like, the high of on Thursday of last week, which was at the time the highest high. Yeah, it's just a very, very small few ticks. So we're in overbought conditions. All we need now is literally a little bit of a dip, a little bit more than 42 ticks, and we'll turn red and have a bearish engulfing ER sell signal. It needs to stay below the close of last Friday in order to maintain a bearish signal at the end of the day. What about the Qs? Well, they're pretty weak. They're already near the low of the day, which is a new low for the last 2 weeks plus. And it gapped down. Now, the first little bit of support is 399, 398 area. But I am expecting it to come down to about 390, 391 more accurately, and maybe even down to about 380 on the QQQs in the next few days. That's my opinion because of the way the market's been moving. Nothing to do with the Santa Claus rally, which says the exact opposite. Hopefully, we're going to rally if the Santa Claus rally works. Doesn't look like it at the moment. So my opinion might be right at this point. Next chart would be the Russell 2000, and it's something like the spider. Major resistance stopped the rally in overbought condition, no particular sell signal. And Thursday down, Friday down, and today down. So it started to go down a little bit earlier than the other indexes. There's a gap to close also on the Russell 2000. I'm expecting 193.70 for the bottom of this dip and a possibility of 188. And one more is going to be the NASDAQ futures daily data. Now, this is not, just a second, legit. Okay, good. So, bit of a break here. Looks like we could come down to a little bit of support around 16,367 in the next few days. That's my expectation from my opinion point of view. Again, the Santa Claus rally supposedly provides us with a rally in early January in order to take a profit on what we bought just before Christmas, which I'm going to show you now is not working very well. Our current quote is right there, making minor new lows for a few minutes, and we have two positions left on the books. The one that we bought on December 20th at 7:05 a.m. was offset this morning right here at 6:45 with a loss. But the second position that we bought at about 471 on December 21st is still a profit, not much, unfortunately. So that's why the line is green. But the third bought at, again, 7:05 a.m. on December 22 is a loss, and we are still waiting for an offset for that position. So two losers on the, one winner on the books, one loser on the books, OTE, open trade equity, and one loss taken. For the Santa Claus rally purposes, anything approximately 474 or higher would probably turn the whole set of trades, all three, to an average of a profit. But we need that rally. Now, futures. And we've got the futures charts. Good. And I'm not sure these are in the right order because I just finished doing Traders Workshop for the second time for Ninja Trader. It's a approximate 45-minute Zoom show. It's called Traders Workshop, Ninja Traders Workshop. And I'll be on again in February, just next month. And also I'll tell you about another show I'm going to be doing next week. So you got it? Questions? info@ersignal.com. Email me. This is the E-mini from a different perspective. I'm looking for a correction. Next chart should be, but it's not. I'll go to coffee. Bouncing off of support. No signals lately. Not much to say. Sugar. Neutral momentarily. Trend is obviously pretty weak, down, but we were very, very oversold until a couple of days ago. So I'm thinking this rally may have a little bit more legs to it, and it wouldn't surprise me to get up to 2360. But the trend is your friend, and it's down, and I could expect to see some sell signal maybe before it gets up to 2360 if it can in the first place. So I'm basically neutral to bearish. And if there's a rally, well, it will probably provide a good short sale. Next, cotton the rag, rocking a hard spot, trying to hold the support area, dipping down a little bit this morning, not too much to say. Next, soybean oil. Hey, 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 we have a brand new bullish buy signal today. Okay, let's see how this one works. We had a bullish buy signal last on October 12th, lasted a few days, but that was during a head and shoulder top downside move to reach its minimum objective, which it had not reached yet, and that was down to 50, which it did get to a few weeks later. So this brand new buy signal depends upon today's closing price above the close of Friday. Then we'll have an official buy signal. If it goes back down and does not have a bullish engulfing, no buy signal. No green, just going back to yellow, oversold. But right now, it looks very good, like a very good chance that we're going to have a bullish signal on soybean oil today. Let's keep track of this one. Platinum, sinking off of overbought conditions, up against the resistance area. No surprise. I expect it to come down to 970 and maybe even start to dig its way into that support area further south. Next, gold. Bearish engulfing today, right now. Official new short sale signal just after a little bit of a possible double top. We had a sell signal on December 4th. It was a whopper. And it dropped for a couple of weeks very nicely. Then we had a bullish engulfing, but it's not a buy signal because it wasn't oversold at the time. But, you know, bullish engulfing is a bullish engulfing, and it's supposed to make the market go up, which it did. And now we have an official ER sell signal red if it stays lower on the day and closes below Friday's close. And it's not down very much. So this is a little bit iffy as far as the end of day situation is concerned. We'll find out tomorrow, next, or this afternoon. OJ is finally beginning to rally. This has been a whopper of a trade. We are still short. We haven't hit our stop yet. There's no signal here. We're just going to end up taking a really great profit if we rally a little bit more. But it's no surprise we're rallying because of the very oversold conditions. We got down to a level of 14-ish. That's pretty low. Now, that doesn't mean this bear move is over. It means we're going to have a little rally in this bear move, in my opinion, whether it stopped out of our short or not. I'm looking for a minimum downside objective of 287. Remember, the first shoulder was a bearish engulfing ER sell signal on October 31st. Then, unbelievably, we had a new bearish engulfing ER sell signal on the top of the market November 21, which led to the creation of the last shoulder high, December 12th, one day earlier than I had forecasted, and a dollar short, so to speak, a little bit lower than I thought, and down it came. Great. Excellent trade. Past tense pretty much, but we're still in it. Could make some more if it turns really quickly back down again. So I'm still bearish, but we are close to getting out of this great new short from the top of the market. Next, cattle. Rally, support area, oversold conditions back on December 7th. Buy signal in the interim, and now a new high. We never got stopped out. Our equity plot should be up here, and it would be green. Good, looking good. Now the cattle trade from this buy signal is doing just fine. Next, natural NQ, NASDAQ futures, big break, getting close to the low of the day. I see everything else is sinking a little bit. I want to go to the DIA real quick because it's about to turn red real time. We won't be able to see this very often. Go to, okay, here it is. There it is, there it is. It just turned, if I was 2 seconds faster, we'd see it change from yellow to red. If it stays lower on the day, we're going to have a brand new sell signal at the top of the market in the DIA. Hopefully it's going to work great. All right, going back to futures. Sorry about that. And next chart, that was NASDAQ, is the bond futures. Now, this is a bullish engulfing at the bottom of the bond market to the exact day, turned green, oversold conditions, bullish engulfing, and up it went like crazy. Hit resistance, a couple of different levels. I was looking for at least to start with 117, but we got much stronger than that. That helped the stock market rally carry further than I thought also. And now we're seeing it start to make new lows. So no surprise that the indexes, stock indexes, are starting to slip. No shock. What about 10-year notes? And I don't see that. It's silver instead at the moment. We'll get to 10 years in a moment. Looking for a little bit more of a downside correction. Sell signal on top. Sell signal almost on the high day. A buy almost on the low day. A sell on the high day. A sell on the high day, the second high of a double top, and a sell signal on the first day of a double top when the two prices are almost identical to the tick. Both are ER sell signals. And a buy signal green on the bottom back in March 10th of this last previous year. What do we got? Soybeans, downside breakout. Bearish, very bearish for soybeans. This is a new low on this continuation contract since June of last summer, and breaking all of those other lows, including a buy signal was really good for a month or more, and a modestly good buy signal not too long ago. That did not work. We just got stopped out Friday with a small loss. We're not in the trade anymore. We have new low ground, but getting oversold again for soybeans. What's next? 10-year notes, like the bonds, starting to slip, new lows for a couple of weeks. And we're still long from an ER3 trade in this particular case, 2 days after the bullish engulfing buy signal. And the minimum objective on the 10-year note head and shoulder bottom has been fulfilled. And now it's looking toppy. No shock. Great. How far down? Probably to about 111. Maybe a little further than that. The head and shoulder bottom formation is now past tense. It was created, it broke out, it reached its minimum objective and got overbought, and that's the end of that. So I'm looking at a downside correction and a long-term bull trend in bond futures and 10-year note futures. Crude, dipping into support. Bearish engulfing is probably going to drive it down a little further to the bottom of this trading range. 67.11 is not out of the question, and that's a pretty decent support level. Yeah. Natural gas, I think I'm going in circles, and heating oil. Yep. Okay, ladies and gentlemen, thanks. Go to Ninja Traders Workshop for the 45-minute interview with Tom Schneider and myself. Have a great day. Mañana.